Hi, I'm Manju Puri. I'm the JB Fuqua Professor of Finance at Duke's Fuqua School of Business. My research over the last 25 years has been in banking, bank firm relationships, entrepreneurship, and fintech. So this talk is part of the Fuqua LinkedIn Live series. The topic that I'm going to talk about today is the Paycheck Protection Program. Why were the guidelines changed? Is the money really reaching needy small businesses? And so, if we think about the Paycheck Protection Program and what was the intent behind it, it was to give small businesses the funding necessary to survive during the COVID-19 shutdown, which was initially estimated to last about 2 months. There is broad support that small businesses are important. Small businesses are considered the lifeblood of the economy. According to recent census data, small businesses, defined as firms fewer than 500 workers, account for over 99% of businesses in the US. And if we go even smaller, think of firms with fewer than 20 workers, they make up about 89%. And so there is broad support that small businesses are important, and we need to do whatever we can to sustain their survival. And hence the PPP, the Paycheck Protection Program, it was passed through pretty quickly with a lot of support from all sides. And initially, 349 billion was passed by Congress, essentially giving loans of about 8 weeks of paychecks for small businesses, which were forgivable under some conditions. Now, it was exhausted in less than 2 weeks, and so Congress got together and they did a second round of funding of another 310 billion, which was passed on April of 27. Now, not only was the initial round exhausted very quickly, it went to the largest of the small businesses. So if you look at the numbers, large loans took a large proportion of the money. So in the first round of the PPP funding, loans of more than 2 million accounted by number 1.5% of total loans. But if you look at the volume, they accounted for a quarter of the total pool of money. Now in the second round, they did a little better in reaching the smaller businesses. These large loans accounted for about 0.3% of the loans, but still in terms of volume, it was still 19% of the total amount pool of the second round money. And so what we see is large loans from large businesses got a large chunk of the pool. The next thing we see is that a lot of this money actually went to public companies. So nearly 300 public companies got PPP funding, and there was a lot of publicity about this and criticism. And as a result, the guidelines were changed. And so the guidelines as they stand now is loans over 2 million will be audited. And the guidelines further state that if the audit finds that the firm didn't need the loan to operate the business and had access to other capital, and then there would be sort of bad consequences for the firm. The Treasury has encouraged PPP recipients, take another look, and if you really don't need the money, you have till 14th May, you can repay without any penalty. And so what you see is if you look at the largest of these large loans, let's say above 2 million, about 25,000 such loans were made in the first round, and in the second round, the number came down. It was 7,500. Right. Now, what exactly constitutes needing the money? The guidelines are not quite clear. So if you have deep-pocketed board members, do you not need the money? If you have a line of credit, do you not need the money? And so because there's some ambiguity, I think the takedown has slowed down as companies are evaluating this. And so a number of companies who have got the money have actually now returned it. Like LA Laker basketball team got PPP funding, they returned it. A large number of public companies who got the money returned it. So the first was the burger chain Shake Shack, they returned the money. Then you had Ruth's Chris Steakhouse, Potbelly, Ashford Hospitality Group, to name a few. And others are considering returning it. given the revised guidelines. And again, the reason to revise the guidelines is to try and get the money out to the smaller and the needier companies. At the same time, this has increased the uncertainty about who can take a loan. Now let's ask the question, why did the largest of the small businesses jump to the front of the queue, so as to speak? Now, some people have argued it's because of the fee structures. And the way it goes is the larger the loan that you make, the higher the fees that you get. Now, this is at best part of the story, and I don't even think it's the main part of the story. I think to understand this, you have to see the way that PPP loans were made. And the way this was done was you had to apply through banks. Now, what are the incentives of banks? So there's a large banking literature that suggests that relationships are important. So if you look at banks, the relationships with existing customers matter a lot, right? And so research suggests, if I have a long relationship, I'm more likely to in the future maintain this relationship, get more business. It's likely to be more profitable. In fact, my own research, what we found was it's not just past lending relationships that mattered. Did I lend to you in the past and you repaid the money? Even a simple thing such as having a checking account with the bank makes it more likely that you would get a loan. And we also find it is more likely that the loan will be paid. So you actually see, sort of good credits being made. And so it's no surprise that banks focused on existing relationships. In fact, many banks said, in order to apply to us for a PPP loan, you should have had an account with us prior to 15th of February. So what this means is existing relationship customers with banks, small businesses, they were more likely to get pushed in front. They were more likely to be processed first. And clearly, if you're a large, small business and you have a profitable relationship, again, you're more likely to be processed first. So what does this mean for the others? Smaller companies who might need the money, but let's say the bank is not an approved lender. So I talked to some of these people, and I talked to one entrepreneur who had a bank whose bank was a credit union in California. But this credit union was not a pre-approved lender. And so they couldn't apply for PPP through there. Now, this entrepreneur was an MBA. He was sort of clued up, so he didn't stop there. He knocked on different doors. He went to other banks, and he was turned down by a number of them, saying, you're not an existing borrower. So then he tapped people he knew who had got PPP loans through their banks, used them as contacts, and finally, with some perseverance, he was able to get the loan. But this is a fairly sophisticated small business. Think of the mom and pop stores who don't have the same contacts, the same sophistication, and their lender can't process it. Do they get left behind is sort of the question. Now, let's talk about what are some of the other ways or other things that could have been done. So let's talk about the guidelines and let's talk about the mechanisms. Now, on the guidelines are being revised, and there's a reason they're being revised, right? And the program was pushed through, in all fairness, very quickly. And it was important to get the funding out to the small businesses that needed it, and it did do a lot on that dimension. However, when they found that it's the larger of the small businesses getting it, then the guidelines changed to try and avert that. And I think it is fine to change guidelines. It is appropriate to do so, but it should be in a predictable, time-bound way so that businesses know what they can or cannot do. Otherwise, there is enormous amount of uncertainty, right? And so to reduce the uncertainty, the revisions need to be time-bound. We also need to think about, what is the new normal going to be? And so if I'm a business, is it better for me to take the loan and do the payroll for 8 weeks? Or is it better for me to shut it down temporarily, see what the new normal is, and then start up again, maybe in a different way or with a different strategy? And should I be spending now? Should I be spending 2 months later? Should we allow flexibility for that? These are all things that I think we need to think about. The second thing to think about is the mechanism for getting PPP. And so banks have been the vehicle, and there's a reason for that, but there are intended consequences and unintended consequences. You know, on the one hand, banks are everywhere. You have good reach, good processing capability, and so it makes sense. That's the intended consequence. The unintended consequence is the power of bank-firm relationships and the way that can distort the loan-giving process, which may or may not be quite in accordance with the policy of the objective with the objective of the policymakers. And so, what are some alternatives? You know, are there ways that we could think about that might fix some of these problems? So we could think of harnessing technology using web-based technology. We could think of centralizing this. So think of a central web-based portal, for example, where everyone puts in their applications, and, you know, as the government or the central body, I can see all those applications. So this has a couple of advantages. First, information is a two-way street. So I can see, I get a handle on how much is the demand, how many people are actually applying for these loans. I can see what the distribution is, how many are really small, tiny, what about the big ones? And then I can see how to allocate. And so maybe give priority to the really small and the needy ones, maybe the really large loans within the small businesses. Maybe you do a little more scrutiny, but you have the overall information so that you could do this. And then the existing relationships don't push it a certain way. You know, maybe you have a chance for a more equitable distribution. Another thing you can do, and which has been done, which I think is a good thing, is to simply approve a broader set of banks. Now, research tells us that small banks lend to small firms, right? And if you look, in fact, at why new banks are created, which tend to be small and community banks, this is actually one of the reasons that they often put, that they are underserved segments in the market that need serving, and these small businesses are there. And so allocating 60 billion to small and community banks, as was done in the second round, I think is a good thing. It's not just backed by research, but if you look at the numbers too, at least what the SBA has released so far, what you see is the allocation by the smaller banks, those loans on average tend to be smaller. And so hopefully that means the reach is better. Well, I do want to leave some time for questions. So at this point, please feel free to send the questions, and I will try and answer them as best as I can. Okay. Okay, so the first question is, do you feel that the most needy companies stand a chance to get loans or grants, or have these opportunities passed? Is it too late to send help to some of these companies? And the answer is, it is not too late. There is still money in the pot. The last that I heard, about 120 billion is still there in PPP funds. And so if you're a small business, you can and should apply. Now, if you find your bank is not going to do it, do not get disheartened. You should go ahead and approach other banks. You might have a better shot if you approach the small community banks. And my hope would be that you actually would be able to get funding. Okay, the second question is, how will audits of businesses receiving loans above 2 million help? You know, what's the idea? What is it that the government would learn? So there's a reason for that. And the biggest reason, of course, is that there is potential for fraud. So the first criminal charges have already been levied on fraud. I think there were two New England businessman who claimed to have dozens of employees working for them, I think in the restaurant business, and allegedly they claimed more than $500,000 in PPP loans, and and so that's being investigated. The second question is, do these companies, actually need the loans? Is the money going to the right places? And so the reason for the audit is to deter companies who don't need these fundings to get it. But again, the guidelines need to be clear, right? And that is, if you take the money, otherwise companies don't know what to do. So if you have a line of credit, do you not need it? If you have a loan from someone else, do you not need it? What if you've defaulted on the loan? Then do you qualify as needing it? And so with all that uncertainty, it certainly becomes a lot harder to figure this out. Okay, the next question is, how soon could we know how many small businesses have folded as a result of COVID-19? That's a good question. It's really still too early to tell. Undoubtedly, there will be some companies folding, and we'll have to see what the aftermath will bring. Having said that, there has been a survey from the US Chamber of Commerce, and what they have found is that a quarter of small businesses have temporarily closed due to the pandemic. Another 40% said they were likely to shut down temporarily, and 43% of small businesses thought that they had less than 6 months before they shut down for good. So clearly, we are looking at potentially a lot of businesses folding up, and the PPP, despite all the money, it may or may not be enough to prevent all of that. Okay, then I have a couple of questions. I have one from an alum in Oregon, I think DJ Bogie, saying, hello, Professor, do you have thoughts on small cap companies, public companies less than 500 employees, accessing PPP if they're operating at a loss? What would that mean? And related to that, there's another question, which I'm going to include with this, and that is, how do we know which businesses are more in need than another, right? And this is difficult, and I think, DJ raises a good question. If I'm a public company and I'm at a loss, or I'm about the point of being delisted, am I in need or am I not in need? And so this is a non-trivial question, right? At what point do you decide that a company is in need? And so again, this is something that requires more scrutiny, and probably it has to be done case by case. I think ex ante, if you were just looking at the distribution, probably I would say, it makes sense to give priority to smaller loans from smaller businesses first. And that doesn't mean others may not be deserving, but you need to look at it carefully. I don't think it's a one-size-fits-all kind of question. Okay, then the next question is, why did the SBA use banks to process PPP loans? And I understand the reason. I actually think it's very, very intuitive. Banks are in every nook and corner of the country. Almost everyone has a bank account, and they have the processing capabilities. And so it is very intuitive to say, why not go ahead and lend through banks? Wouldn't they access everyone? It's actually quite similar to the question I used to get when I was in Silicon Valley from governments all around the world. And that was, if we want to replicate Silicon Valley in our own country, how do we jumpstart it? And the supply of VC funds is one way. Could we do this? by simply having our banks give venture capital, right? And so that would ensure adequate supply. They're in every nook and corner. They can access small businesses. Surely that's a good thing. And the answer is yes and no. They're in every nook and corner, but they have different incentives, right? And I've done a lot of research on that. And this is why they may or may not, be the best. They will do venture capital in a very particular kind of way, and they will not be necessarily the best, way of promoting, let's say, early startup venture capital. And similarly, yes, it makes sense to let banks, do PPPs. In fact, I would say even if you centralized it, you could have companies ask for the disbursement through banks, right? But we need to recognize that the incentives can indeed be different. Okay, we have questions from another alum, Favlo from Buffalo, saying, do we have any insights on minority-owned businesses accessing funding? And I think that's a good question. We don't have the data yet, but if you look at the distribution, and certainly there's a lot of anecdotal evidence suggesting that minority-owned businesses, small businesses, are perhaps, towards the end of the queue here. And again, the reason for that is the same. You may not have a strong relationship with an approved lender. And so if so, you might have to go ahead and look elsewhere. And they may not know that, or they might get discouraged, after applying to one or two lenders. And so again, for small or minority-owned businesses, I would say you need to persevere and continue knocking on doors, and the chances are good someone or the other would actually give those funds to you, right? Okay, and then the next question we have is, what does research show about the types of businesses that usually have access to loans and fundings? And, is that sort of the reason that you see some of the outcomes of PPP? So I think when you think about this, you have to put yourself, in the shoes of the bank. If you were a bank and you're lending, what would you look for? And you'd simply be looking at cash flows, right? Is there enough cash flows for them to pay back the loan, the interest, the loan? And absent the cash flow, would there be enough collateral and other things? Because ultimately, the bank doesn't want to make losses. And I don't think as a society, either we want banks to make losses. If lots of banks make losses, we've seen in the financial crisis, there can be bad consequences. And so typically the types of businesses that have access to bank loans are mature businesses, ones with good cash flows, good amounts of profitability, and again, a lot of future business sort of going forward. So to make it profitable or sort of incentive compatible with the banks. And again, this fits in with what we see from the PPP lending outcomes. This is the reason why you have the larger of the small businesses potentially going ahead and getting some of these businesses. Okay. Let's see. So I think that's most of the questions. Okay, one more from Stephen. He's an alum from Illinois. What does the availability of funds imply about the potential depth and length of unemployment? Can you comment on the speed of hiring in small businesses versus large businesses? So let me answer that at two levels. First, we will eventually have data on employment and subdivided by various businesses, so we could answer this question better and in more depth, right? But what can we say, right? I mean, if small businesses are the lifeblood of our economy, right, and they account, as I said, businesses under 500 employees account for 99% of the businesses. If a lot of these businesses fail, this is going to hit unemployment very hard, right? And that is the endeavor. That's the reason behind PPP. And that is, let's not have this temporary shutting down, because there are frictions. If a small business shut down, it's not that another one can pop up immediately in place. It's not seamless. And so that's the reason. And so, there's no surprise here that the level of unemployment is as high as we're seeing it. I think businesses across the board are really getting affected very, very badly. So I think at this point, we're running out of time. I'd like to thank you all for tuning in. And, I'd like to encourage you to tune in into next week LinkedIn Live. And that is, our hosts are going to be Sharik Hussain and Ines Black. And they're going to be talking about the labor market and the importance of recruitment in finding a new job. Okay, thanks and goodbye.